I don't know much about the industry, but I've, obviously know a little bit. But so this is a fund structure, and so this would be like in your subscription or your private placement agreement. Is this a 5 to 7 year hold? What's how do we get out?
Yeah,
Great question. It is so it's a 3 to 5 year hold,
three
and
to
it's very similar. So we've actually mirrored our model off of real estate. So meaning, when we divest the assets in 3 to 5 years is when you're going to get back the multiple as well as your initial capital.
How long is King? I mean, how many exits have you guys done so far?
So on this model, we started in 2015. This is kind of when Jay decided that he wanted to use a private equity model. The first exit we did, we achieved a 3x in basically 18 months. And then since then, we started up basically the second fund in 2020. And that one is still ongoing. So we've had the first exit, the second and third, having very strong, been averaging 8.8% monthly revenue. And we're really just building up the asset value to divest those.
Mike, what should somebody do if they don't have experience in this industry? It sounds appealing, obviously, to anybody. This makes sense, but like, how do we know what to look for? What would you tell somebody? What would you tell your mom or dad who was
Mhm.
looking to invest to do due diligence to understand this business model more? Obviously, find out more about your company and things like that. But what to learn the industry, I guess.
Absolutely. Well, the reality is none of us are geologists, right? So if we go through the PPM and look at the science, no one's going to be able to really figure that out. So a big thing you want to look at is, the track record of the company. We've been in business for 26 years, as well as our model. I mean, really, what differentiates us to every other oil and gas and a lot of the horror stories is the standard model is, we'll raise $100 million and we'll drill 10 wells, and off those 10 wells, you're going to get monthly revenue for the next 5 to 15 years, hoping that oil prices stay strong in the beginning, and that you can get that return back quicker. So I would say the biggest difference maker, and what I would really recommend is, I know Vinny had mentioned it. Our owner wrote a book um, talking about our model in oil and gas. And anyone that's interested that actually watches this that would like to receive a copy, just let us know. Send a message to Vinny or Bo, and I would be happy to actually mail you out a copy because I do think the first step is better understanding the investment, right? I mean, really going through the presentation and getting a good idea. And from what we found, many of our partners are familiar with real estate. And there are many similarities between our project and a multifamily deal. And I think that's why it's made it more simple to understand than a standard oil and gas deal. So that the biggest thing I would recommend is come to the webinar, learn more about it. Because if you don't
I
understand it, you're probably not going to move forward.
I love that because in multifamily, last 18 years, I've been doing it 80-20 split. Both, so it's the same way. 80% goes to the investors up to the
Mhm.
return of capital and 20% to the general partners.